Hello there, this is fairbinaryoptions.com, and this is a currency pair that it is also being called a cross. You know, the currency pair that basically connects two majors, always it is being called a cross. For example, this currency pair is the result of the flows that are going through the Australian dollar, US dollar, and through the US dollar and Canadian dollar. So Australian dollar, US dollar, and the US dollar, Canadian dollar are actually the majors, and the Australian dollar and Canadian dollar is the cross. Now, why is that important? Because this one acts exactly like the Euro Japanese yen, another cross, or like the Euro Great Britain pound, which is another cross, or Euro Swiss franc, or Great Britain pound Swiss franc, and so on and so forth. The list can continue, of course. Now, the reason why we are looking at this Australian dollar and Canadian dollar is the fact that we are having a triangle, as you can see, to the upside, but this is not a regular triangle. This is being an ascending triangle. As if you take a look at this area here, from this moment like this, it has been tested and tested. So basically, price is building energy here to cross higher and fails, tries again and fails, tries again and fails. This is coming after a series of higher lows. So this is a low, and there is another low there, and that yet again another low here, and another low. And this is the recipe for price building the energy to break higher, and therefore I would like to buy call options on the Australian dollar, Canadian dollar with end of day expiration date today. We try to avoid the volatility in the non-farm payrolls to be released in something like 45 minutes. But anyways, this being a cross, whenever you go into an important economic release, you have the advantage of this being influenced by two different majors. Normally, the Australian dollar and the Australian dollar, US dollar, and the US dollar, Canadian dollar should be inverse correlated. It is not the case anymore due to the excessive weakness in both of the currencies. Now, the name of the game this week has been a lower Canadian dollar. First of all, because of the IVPMI that we have in Canada this week, it was being released well below the 50 area, and this is as bearish as it gets, signaling conditions for the PMI index in Canada, and signaling contraction. So that was quite bearish. From that moment of time, this was that moment of time visible also on the Australian dollar, Canadian dollar. Price broke to the upside and it never looked back. Now we are expecting the trend to continue into the Friday flows, and at the end of the day, basically price to be higher than our striking price here, 96.61. So what we are doing, actually, we are buying call options with end of day expiration date. So let's write here that we are buying call options with end of day expiration date. Now, if you think of the facts, or if you think of what is making this currency pair to move, then I would say that chances are the Australian dollar, Canadian dollar to move to the upside based on the strength of the Aussie today, not on the weakness of the Canadian dollar. So it remains to be seen. You do the math what this means for the majors, but for the cross, things look a bit let's say bullish. Now, whenever things looks bullish, then you try to buy call options. Also, price is coming out of a contracting triangle, this one, and basically we are looking for something like 1, 2, 3, 4 in terms of Elliott, and then price to pierce to the upside for the fifth trade. Thank you very much for being here. This is fairbinaryoptions.com, and all these analyses are possible due to the help of our sponsor, Lionel.